I could see a divorce between the market and the economy. The market's looking ahead and saying, everything's going to be fine. At least that's today. That's why we're up 1,200 points. Tomorrow they might not feel that way. But when they start announcing deals and deals are done, the market's going to look ahead. But my argument is the economy's not. By the time you see the trade flows actually change, by the time you see all of these issues worked out, GDP is going to suffer. And you're going to see GDP. You're not going to see a real boost in GDP from these new trade issues for another 2 quarters at least, maybe 3. So the economy is going to slow down. And the question on the table is whether or not the market looks ahead and passes it or says, okay, I got to slow down and I got to draw down. And that's where I am.
Hey everybody, welcome back to Markets and Madness, the place where we like to discuss the madness that occurs when economics, politics, and personalities all move in different directions. And we've certainly had a lot of moving directions these last couple of weeks. I know we've taken a week off. We're back at it. Busy Monday, big upswing in the markets. How are you, Tim? How you doing today?
Hey there, Fred. Put some hedges on. I'm sorry I put them on. Overall, I guess I've weathered this storm. This past couple of weeks have done pretty well, so I got really no complaints.
Yeah, I was thinking about it earlier today, and we're in a trading range. Only it's a monster-wide trading range.
Yeah.
You look at the S&P, 500 to 600, I think is the trading range. We were down below 500 earlier, I guess it was maybe 2 or 3 weeks ago. And now here we are up at above 580.
When we said volatility is cheap, we weren't kidding.
Yeah.
Volatility has exploded.
Yeah. Even when volatility was expensive, we were looking to sell some low delta strikes, and that pretty much worked out as well. So what do you think about the agreement at all? I haven't seen a lot of details on it, just that there's a 30-day moratorium. I'm gearing up for a downside trade now. Like
90-day moratorium.
Yeah.
And yeah, I got to think so. I think the big stalking problem, the point that's going to give the most problems is intellectual property. I don't see the Chinese really caving in on that very easily, and Trump may have to lift the hammer again. I mean, it took a hammer, to get them here. The UK deal looks kind of interesting. It's a nice template for everything else. But let's just play some scenarios here. Let's assume for a second that a new trade template is being set up. And the template is lower tariffs, and that's as far as it goes in common. And then everything else is what they've been saying, bespoke, tailored to individual countries. Like Korea, okay, we provide military for you, so we want some concessions there. And we don't know if they're going to be tariff concessions, but there'll be trade concessions in one way or another. And that's what he did with the UK. The UK said, well, we need more cars. We got to sell you more cars. It's all right, I'll give you a quota, 100,000. And in exchange for that, he got some dairy benefits.
Concessions.
So there's a basic template, and then he's working around a template. But here's my problem, and here's my scenario. That's government to government. So let's assume after all of this, once we're done, and maybe that's another 30, 45 days, then individual CEOs have to decide, you know what, I think I'm going to change my production into India or out of China or in this place or that, because they're seeing all new deals from new trading partners. So there's going to be some changes in the way imports come in and the decisions companies make. So governments to governments, that's one thing. But CEOs to CEOs looking at it, and then you've got the practical issues. Like, okay, I'm going to import XYZ widget from India now and not China. Let's get a prototype in. Let's see how it looks. okay, we got a problem with this tread. You need a tighter tread on this screw or something like that. So you got all of these minor issues that have to be addressed from the top down. So you got governmental level, CEO level, then engineering level, then shipping level, and all of these things got to be ironed out. And they're going to take some time. So
There's also the possibility that, that they stay with the status quo.
yeah,
I
and
mean,
let's assume that's true for 50% of the trade. So we're only talking about 50% of the trade. All right. So now companies got a better deal. They're happy with the better deals. But I could see a divorce between the market and the economy. The market's looking ahead and saying, everything's going to be fine. At least that's today. That's why we're up 1,200 points. Tomorrow they might not feel that way. But when they start announcing deals and deals are done, the market's going to look ahead. But my argument is the economy's not. By the time you see the trade flows actually change, by the time you see all of these issues worked out, GDP is going to suffer. And you're going to see GDP, you're not going to see a real boost in GDP from these new trade issues for another 2 quarters at least, maybe 3. So the economy is going to slow down. And the question on the table is whether or not the market looks ahead and passes it or says, okay, I got to slow down and I got to draw down. And that's where I am. I just don't know the answer to that.
Yeah, I'm gearing up for disappointment now. We have the shock and awe. We have the huge bounce off the lows from last month in terms of market trading, in terms of trading this
They're over
market.
3,000 points in the Dow.
Yeah, the S&P went from under 500 to 580. It's a huge move. 15%, something like that, right?
Yeah,
15%
probably more.
move, 17% move overall. I'm looking for. I wouldn't be surprised to see a pullback, something negative comes out, whether it's a comment or people just start to get their head around it and say, what's really changed?
Okay, so we got a couple of things. We got event risk, which is what you're talking about. Those are tape bombs.
Not just event risk, but I think people are going to get, it's the excitement, it's the euphoria. Oh, geez, I got to get long. But now you're going to go look and say, what's changed between now and March 1st?
Well, let me ask you this. Heard in a number of places that the hedge funds were short. And if that's true, this is a short covering rally.
Mm-hmm.
So short covering rallies, and then you got the buy and hold, and you know, but we're really in an environment where, a disappointment in one thing could take you down 500-600 points, and another good news, India's going to announce. So you got all these deals that are going to be built into the table. But I think no matter how good it gets in terms of the deals, you still got, as a practical matter, all of these gears to finally mesh. And you got a lot of reasons. So I think the economy and the market could divorce itself. And the question is the market going to look past a slowdown, maybe not a recession, maybe a recession, I don't know, but maybe a good slowdown? Is the market going to look past that and say, okay, the Fed's going to step in, all is good, we got these deals in the works? Or is the market going to slow down and take some of the euphoria off the table? And I'm confused. I don't know. I got insurance on. The insurance I got takes me out past June. So we'll see where that goes.
Yeah, I'm same mindset, fearful of the downside now. This is the pop that I was looking for 3-4 weeks ago, that we were going to have some good news, some great news, and people were going to jump on it and run with it, and they have. And now I think you got to be just aware of some problems ahead.
Well, we're going to get follow through, I think, tomorrow, because all the techies are going to be screaming that we're up past the 200-day average. And they're going to count that as confirmation. And maybe they're right. Who knows? But we'll see another day at least. So if you're going to fade it, don't fade it today, fade it tomorrow.
You mentioned India. What do you think about India, Pakistan, and how that relates to the markets?
I never really thought that skirmish had legs. I didn't think it was going to get to anywhere near an atomic level. They hate each other. They always hate each other, and they'll always wave their guns at each other. But Kashmir is always a problem. And this was a terrorist act. So all Pakistan really had to do was say, oh, you know what? We didn't back it. Terrorists did that. We're going to look into it, and we'll help you look into it. Now, if Pakistan was involved, that's another story. The government was involved, but I don't think so. It's Kashmir.
That's fair enough. I mean, gold didn't really react to it either way, on either side. So,
Well, there's so much craziness surrounding gold right now. Anyway, how do you figure gold? I mean,
I've still been long, stuff that I've had for years, still in it. But I did buy some protection, and I'm thankful that I did. It's bailing me out somewhat.
I bought some more miners a couple of weeks ago because I think the miners, it's not just gold with the miners. You got copper and you got silver, and so I like the miners, but they really have lagged. They haven't gone. But India, that INDA ETF took off finally.
Yeah, and I think looking at an ETF we've talked about what is it? We've got GGAL and YPF.
Latin America, you mean?
Yeah, Latin American. I'm thinking Brazil. If you could buy some long-dated calls in Brazil, now there's an election to come. I think it's an October election. So you got to be looking probably June of next year. Some really low delta, long dated calls in Brazil. I've got a bid out there that's far away from the markets for some really low delta stuff, with the idea that it's a lottery ticket. If the election falls the right way, it could hit a home run.
Yeah. Well, I mean, Latin America really has an opportunity to step up here. The trade deals alone and the tariffs could make or break Latin America right now, and that's an issue. Trump looks at Panama and seems to have drawn a line around Panama, and he's close to Milei in Argentina. So, yeah, Latin America could find a good strong bid, and the prices are cheap. It's hard to get hurt that bad.
Right, right. Petrobras is one that always looks good.
Well, that's oil. That's
It's
an
oil,
oil
but
play
it's
more
still
than Latin
Argentina.
American play.
Yeah. What else did I want to bring up?
I don't like the looks of bonds at all.
No, that hasn't.
I think yields are ready to spike.
That's what I wanted to say to you. The Fed last week did nothing, and there was some questions about it. And was that really a pushback against Trump? Are they trying to, assert their own autonomy and authority? Are they vindicated now because of this big up move, do you think? Or is this just too short term?
This volatility has carryover in so many different markets. I mean, you're looking at shrapnel falling every place, and it's impacting these markets. I don't think it's the right time to make any long-term conclusions here. I think you got to wait for the smoke to clear a little bit and see where it is. I mean, that's been our position, frankly, since January. And I think it's probably truer now than it was even then.
When's the next FOMC meeting?
Don't know. And you know how I feel about the Fed. I guess if the economy slows down, the Feds are going to matter again. We'll need a Fed put. And we'll probably see that. I guess overall, I'm more constructive than I was a couple of weeks ago. In fact, a lot more constructive. I'd almost be willing to set the longs and ride it out because of this dichotomy between how the markets feel and how the economy feels. I think we're probably close now where Trump has regained some credibility and people are starting to see the plan and understand the plan. And maybe if the economy slows down, they're going to look at this and say, well, Trump said it's transition. I mean, last week you said buy the market, right? Buy your stocks now. And
I was talking to a hedge fund guy this morning. He says, oh, it's all insider trading. I said, but it's not really insider trading because he told everybody. It's not like he just told a few people. It's not like he told his friends.
Yeah,
He
right.
told everybody buy stocks. So if you tell everybody, it's not insider trading anymore. Now I know the left is going to say, well, the poor can't go out and buy stocks, and they don't have equity accounts, and this is only for the rich.
Trump could cure cancer, and they're
Yeah,
not going to like what. I mean, I wrote Bernie an email today. I don't know if you saw it on Facebook. Um, I said, he had 96 things. Trump says it's a trillion when he means a billion, and I said, Bernie, I love you, and I know you're a good person and you got a pure heart, but I just ask you one thing: try to be a little more even-handed, because you certainly cut Biden a lot more slack than you're prepared to cut Trump. You know, I said I'm sure George could write 50 different reasons where you cut Biden a lot of slack. I don't pay that much attention, but Trump's just the slightest thing and you're on him. And that's the way it is. We had a good friend, Nick, one time said to me, if you like a guy and you're eating at his table and he's eating everything in sight, if you like him, you're happy to see it. If you don't like him, you think, what a gavone. This guy's a gavone. He said, really, it's in the eye of the beholder. And he said, so true. It really is so true. Both of them could say the same thing and do the same thing, and one gets rave reviews and one gets spit on. So, I'm taking it all with a grain of salt. I try to be unbiased. I try to look at the actions rather than the words, because I will say one thing about Trump: he's a used car salesman. You
yeah,
know, everything.
absolutely.
This car gets 70 miles to the gallon, and it's all it's all me, me, me. And in high school, I ran for 6 touchdowns, and but that's the guy. That's what you got.
He's
Now,
a
you could
tough
hate
guy
it.
to defend. You don't want to be in a position to defend the guy, but I'm comfortable defending some of his policies.
Yeah,
I
yeah,
think
that's
that's what
really
it
true.
comes down to. You know,
Certainly more than Biden. I mean, Biden told us the border was secure. He had a guy, this bald-headed idiot, who kept telling us the border was secure. In an hour now, they've clamped down the border. We can't do anything about it. We can't do anything about it. I mean, I just can't look past that. That was just so bad. And what are the long-term effects of that? Zillions of people changing the demographics of the country, changing the voting, the the census, and the redistricting, and just all of those things for what? What are the long term costs of that? And they waived the Constitution, and I guess it's nitpicking. It gets political, but where was the due diligence when Obama sent 3 million people away? I didn't see any craving for due diligence there. And what the hell is due diligence anyway? What is it? And if one party overruns the ability to provide due diligence for decades, I mean, if you provided a court case for everybody who's here illegally now, you're talking about 30 years of court cases. The courts can't do anything else. It jams up the courts completely. So who's responsible for that? The party that led to the overrun of the system, or the party that's in place trying to, I mean, try not to get political, but sometimes you just got to look at it as a practical matter and say, this is black and this is white.
yeah, I'm of the same opinion. We share that thought.
And maybe that's our bias, you know?
Yeah,
Maybe we look at
there are
it.
people that have called on it. Yeah, that people have said that. And it's been brought up to me what Trump has done with this crypto thing is he's gonna steal so much money, and it's back to Trump Air and all
Yeah, I
those.
can't support that. I mean, the guy's selling watches on the radio, and sneakers. I mean, that's a bit much. Call it unpresidential.
Yeah, as I said, it's tough to defend that, and you want to be a supporter of Bitcoin and digital currencies, but you see something like this happen, and you wonder where's it going to lead? Where's it going? Now, I have a lot of friends that have moved to that side of the financial industry, and they're full speed ahead, and they couldn't be more excited about what the administration is doing with digital currencies. But it's like nobody really wants to talk about the Trump coin. Yeah. What about Elon and Doge? It seems like he's stepping down in a couple of weeks, or he's moving away.
Well, Elon has said, I'll find $2 trillion, and everybody's throwing that in his face. But they forget what he said after that. He said, in 10 years, over 10 years. So I don't know if anybody's prepared to give him 10 years, but to judge him now on what he found in 10 days is, I think, anticipating the command, like we used to say in the Army. So let's see what happens. I had a friend who was all over the Doge people because they didn't bring a Fortran coder in, and I said, well, but they said the systems weren't talking to each other. I don't care what language you use. If the systems are not talking to each other, the problem proliferates throughout the other systems that do. And I didn't get a response back from that. Again, they're looking for something to pick on, and you can find enough. But I think specifically to your question, I think Elon had some really high-powered people in there, and I'm glad that somebody finally took a look at what's going on. And even if they save 150 billion, that's 150 billion. I'm happy with that. I don't care if they said it was going to be 2 trillion. Save me 150 billion, I'm happy any day, because that could go to feed the hungry, it could go to build stuff, it could go for medical programs, could do a lot of stuff. So every dime he found is a dime that was being burnt and wasted and stolen.
I saw something briefly. It was someone talking about what Doge has found. The argument was it's not necessarily fraud. You just don't like what it's being spent on. And I thought to myself, well, if you have an NGO, a non-governmental organization, that's spending money on things that are not voted on by Congress, then shouldn't we question where that money's being spent and how it's being spent? And shouldn't we have the right to say, I don't want that. I don't want to go in there, right? They're saying it's not fraud.
Well,
it's waste.
Bernie sent something, responded, because I had made a comment about the public sector jobs or the private sector jobs. And he sent something from factcheck.org, which said that the growth in the public sector jobs was much smaller than we had indicated. And I questioned back, and I said, Bernie, does that include NGOs, who are by definition non-government? So that all of this, I think this is a blind. I think the NGOs are basically a mask, and it's a shield to hide where all the dollars are actually being spent or stolen. You get Stacey Abrams starting a company for $100, gets $1 billion, it becomes $1 billion NGO. I have a problem with that.
The NGOs, to me, started in Iran-Contra, right? But that was having, what was his name? Lieutenant.
Oh, the guy with the hot secretary. Lieutenant? Captain. The captain.
Yeah, I mean, he testified. He was the fall guy.
Yeah, they were wearing his T-shirts for a while.
He was the fall guy for Iran-Contra.
Yeah.
But everything that they're talking about then is what they're doing now. To me, I don't know, maybe I'm not looking at it far enough, but to me, that was an NGO, right? You just call it by another name. It was money being funneled from the government. What they used to call black ops in these books that I used to read.
Yeah.
Right? It's black ops money. That's where it's going.
It's a wash bank. That's what it is. It's a wash. It's a blind.
Yeah.
You can hide it behind the NGOs. And I did a little research on this. I asked GBT, what's the size, how much money, and what's the size of employment in the NGOs? And I didn't get an answer. But they did give me one NGO that had 100,000 people. So these are not small entities.
Yeah. Contract. It's killing me now who this military guy
Fawn
was.
Hall was his secretary, so you could Google that.
You can see his picture here. Hang on. Who was that? That was Ollie North.
Ollie North.
Ollie North. Oliver Colonel. It was the Colonel, right? Colonel Oliver
Colonel,
North.
Colonel
He was
Ollie
the
North.
fall guy, right?
Yep,
And it's to me that was an NGO by a different name. Yeah.
yep.
Yeah.
Okay, so we don't like bonds.
And I think the market doesn't like bonds now, but I'm wondering if it's an opportunity. Because either the Fed's going to cut because the economy's weak and bonds are going to rally, or the economy's weak on its own without the Fed and bonds should rally. Right now, I think the sell-off is just, it's not trading right, and I don't know why. But I'm thinking longer term, it's an opportunity.
I think it's the tariffs that hit it. They said, well, China's going to sell bonds and China's not going to show up at the auction. And I think that's really what hit the bond.
Right, but if that's over with,
I don't think it's over. I think it's a long way from over. Even when they deal, they come to a deal. The question is whether they didn't live up to the last deal. So there's got to be a mechanism in place that says if you don't live up to it, this happens, right? And they got to hammer all that stuff out. And then, as I said, the CEO's got to do it after the governments do it. And then the engineers got to do it, and the shipping, paying, and receiving platforms got to figure out. There's a lot of moving parts here, and they have to mesh. And we're going to pay for it in economic activity. You could see GDP drop down to 1%.
don't you want to be long bonds?
I guess you do, but it's a question of timing. It's a question.
That's what I'm saying. If they're being sold off now because of one reason, and we're looking at another reason, I think maybe buying some of those.
Yeah, you're probably right, because I think that the reason they were sold off was the tariffs.
Yeah.
And if the
Come to
market,
grips with that.
yeah, here's the lesson. The lesson is it's not what we think is going to happen, it's what the market envisions happening. And they don't have to be right. The market doesn't have to be right. The market could be dead wrong. But they could pick a side, and you got to live in that side for a while. So is the market going to look past all of the grief we see? And I think we're getting close to that point. I originally thought, get along around the holidays. But now I'm thinking maybe the fall is time to get along.
You just said something that reminded me of it can be wrong a lot longer than you can be solvent.
Yeah.
Right.
It's next. Panic when everybody else panics, but try not to panic last. If you find footsteps on your face, consider getting up and following them. And the third and most important one, we can't in the long run. Because in the long
All right,
run, we're in
listen.
the unemployment line before the long run gets here.
I think we have to call it here. So.
Yeah.
All right. Thanks, Tim.
Take care.
All right.